Good afternoon, everyone. My name is Thierry Baujard. I'm the CEO of a company based in Berlin called Media Deals. And I'm very happy to share with you tonight some insights, some information, some tips about investment in the fashion tech sector. Very happy to welcome my guest, Anna Williamson, from Edge Venture Capital in London, who is investment manager. And she will tell us very, very soon who she is and what she does. Just to introduce briefly the session. So our company is part of the DeFINE project, and we were very happy in the last 3 years to basically survey and better understand the investment market in Europe for fashion tech. And one of the things we did was to create a mapping of investors in the sectors around Europe. And we've managed to identify, nearly more than 200, different investors from Europe who have already invested in the fashion tech sector at different levels. And very happy to now use this database basically to help companies from the sector to find investors. And another thing we did was also to develop in a kind of dynamic way the network of investors around Europe. So we did different events before the COVID. Now it would have been much more difficult, but before the COVID, we managed to do different events with different investors around Europe. We did that in London, in Stockholm, in Rome, in Milan, and Paris. And it helped us really to build some knowledge, of course, but also some good contacts with different investors that we've been, talked to regularly, and especially inviting them to 2 different investment pitches that we did for our companies, part of DeFINE. We did 2, one last year and one just recently, about less than a month ago. The 2 pitch sessions were online because it was after the COVID, but I think it was quite interesting, and we also tried to look at new format to get companies to meet investors and to understand a little bit how they can convince them basically to invest in their companies. Just to finish the introduction is what we've been doing as well, which I think is very, very important in terms of investment, is really to work on mentoring and to help these companies, these different startups around Europe, to be more ready for investment readiness, meaning to help them to understand how investors are thinking, are working, what's their business model on their side, so that they have a better idea whether it fits in their funding strategy and whether investment is the right path, and how they can find the right investor. And this is a very important part, I think, of the work we did. We tried to do as much as good as possible to get the companies to be ready for that. So the idea of this discussion, because now that I've been talking, let's have a more informal discussion would be good, is really to get insights from an investor in the sector, and really trying to understand a bit more how a venture capital company is working in this field, and what are they looking for, what are the criteria, how do they work, how do they select companies, etc. I mean, I've got quite a lot of questions for Anna, and hopefully you have also questions. So don't hesitate to put questions in the chat, and we will keep the last 15 minutes, I guess, to respond to your question. And hopefully you thought about things that I haven't think about. That will be great. So in any case, thanks, Anna. Maybe do you want to give a little bit of background and why, why are you doing this job at the venture capital company? And yeah, tell us everything. Thank you.
Thank you. So yes, I work at a UK-based VC and I'm an investment manager there. So my job includes finding deals in and around the creative economy and taking those companies through the investment process with the view to make a final investment. My experience previous to Edge is that I studied fashion management at Nottingham Trent University in the UK. And following that, I spent 3 years at the online retailer ASOS, and I was on the operational side of the business there. Did 3 years there, and it's not as glamorous on the cold face of fashion as maybe one of the reasons. But the main reasons why I came into venture is because I was really interested in how businesses within the fashion industry as well are built, scaled and financed. When I was at ASOS, they'd already gone through their IPO, but I became really interested in how businesses grow to that level and what that journey looks like. So I managed to get a job at Edge. And Edge is a creative economy focused VC, so it ties in very nicely with my passions. And at Edge, we are passionate investors in creativity. So we leverage senior leaders and internal expertise to accelerate emerging industry champions. Should I just go on to a little bit about what Edge is and what we do there?
Yeah, yes. I mean, it will be good because, it's not so usual to find venture capital or companies who are focusing on the sector. I mean, I've been working in the sector for a long time. It's the sector to invest. So it's interesting that venture capital is on that.
Yes, I'll carry on. Oh, I can't hear you.
It's the second time I've done that today. We just lost Thierry, but Hannah, if you want to carry on, kind of where he...
Yeah, of course. So Edge Investment. So we focus solely on the creative economy, and by this we mean businesses which are either creating content or products within the creative economy. So it could be books, music, fashion, sport, live experiences, or digital content. And we also invest in technology companies which are supplying these creative businesses. So it could be technology companies which seek to monetize the product or service, distribute that product or service, exploit it, curate content, or increase customer engagement. In terms of the specifics around where we invest, so we typically invest. I'm just going through our remit.
I'm back. I don't know what happened. Sorry.
No worries. So we typically invest around £1 to £5 million as an initial check into businesses which usually have evidence of product market fit or on their way to proving that. Usually look around for around £1 million in revenues. We really want to see exceptional management teams in category defining businesses who are highly capital efficient. We also tend to look mainly at UK businesses. We can invest worldwide, but all businesses that we invest in have to benefit the UK economy. And then in terms of current investments to date, we've got investments spanning across esports, digital media, user-generated content marketplace, AI speech-to-text transcription platform, as well as an ad tech company. And we are currently in conversations with a number of businesses in the fashion tech space, which is quite interesting at the moment. We've been tracking the fashion tech space for a while now, ever since I started at Edge over 5 years ago. So we are seeing these businesses really mature, and I think there's been a step change in traction within these businesses as more kind of big retailers and players in the space are looking for solutions to problems which exist in the fashion world, which these guys can solve.
Yeah, that's great. Interesting. I mean, obviously, you already told us quite a few criteria that has really interesting, in terms of geography, in terms of revenues, in terms of, the management thing, etc. So we'll go back, I think, about that more in details, because that's obviously key points that people want to understand. But maybe before that, I wanted to know a little bit. I mean, okay, you have a background in fashion, if I understand, so that's obviously that's good. And the next question is really about, fashion tech is a very broad term. Is a lot of different types of businesses, etc. And I wanted to know a little bit what is your analysis of that? What do you think is more interesting for venture capital, for growth, and maybe other subsector less? And how do you approach these different subsectors? Because it can be very wide, from wearables to e-tailers, etc. It can be very, very, very broad, and we saw in DeFINE that the project can be very different and do not fit always in the same box, for investment.
Yeah, definitely. So in terms of what we're interested in, me personally, I think in the fashion tech space, the fashion industry is ripe for change. And this change probably needs to happen quite quickly, because there's a lot of businesses that need to innovate, and there's technologies that will pave the way. So kind of two trends that we have been tracking quite closely is one that's been accelerated by, well, both have actually. One that's been accelerated by COVID is the move to the online experience. So we're seeing post-COVID, a lot of high street stores are closing down. Some are saying, it's going to be the death of the high street. So how can brands and retailers interact with customers in new and exciting ways? When I was younger, friends used to meet on, down the local shops, and we would go shopping together, and that was a social experience. So if we're seeing a shift away from that now, how can customers engage in that new way that excites them? So I think we're going to see a reinvention of the consumer experience through online and offline integrations, so social commerce, mixed realities in store, experiential or concept stores that kind of delight you when you go in there. It's not just about the purchasing, it's about how you interact and how you feel about that brand and how you build a connection with that brand. And another kind of big trend that obviously everyone's aware of at the moment is the focus on sustainability and the harm and the damage that overproduction does to the environment. If we rewind back to 50 years ago, there wasn't such thing as fast fashion. People had clothes, a couple of outfits, Sunday best, and they cared for those items, and it wasn't about having a huge breadth of wardrobe. It was kind of capsule collections. Whereas now we're seeing a lot of overstock, overproduction, throwaway fashion. So we're kind of very interested in sustainable manufacturing methods and materials, ways that people can innovate in these areas, and as well as kind of the longevity of products. So not just buying an item for one wear that you post on Instagram and then it never sees the light of day again, but around resale and rental, and kind of tools and technologies that enable that, such as kind of blockchain, which you can authenticate luxury goods to help you resale. So I think those kind of the sustainability and the digital online experience and offline experience is also going to be two kind of trends that I'm going to continue to track.
On the second trend you mentioned, I mean, are you also looking at new business to business models to change a little bit the supply chain? Because obviously when we talk about sustainability, I mean, in this industry it's a long value chain, and things need to be changed at some part. So are you looking as well into this kind of B2B new way of working on this value chain?
Yes, yeah. So we're looking at kind of on-demand supply chain technologies. Companies really need to reduce the complexity of current supply chains and find ways to increase full price sell-through, to reduce inventory levels, And the way to do this is going to be through a demand-focused approach. So, you know, a lot of retailers were sat on so much stock during COVID, stores weren't open, that's just sat there hemorrhaging cash. So a more demand-driven approach will be necessary going forward. So there's that aspect, and then there's also on the materials side, having longer lasting materials, more high-tech materials, which mean that your clothes actually do just last longer. So there's two ways to look at that one, really.
Yeah, but do you see the sector changing into that? I mean, of course, the startups are very interested to disrupt that, but do you think the sector that is quite a conservative sector, I mean, used to in any case, do you see some acceptance of this changing, on how fast can they change? I mean, I guess they have to change and they know that, but how fast can they change?
I think following COVID, there's an acceleration in the willingness to change from retailers and brands. I think historically, supply chains and the way that they have been built for existing larger retailers are so fine-tuned to kind of really eke out every efficiency within that. So any disruptor coming to displace or amend or disrupt that will find it quite a difficult sales process, in the fact that this is so entrenched in a company's kind of ways of working that they don't really want to disrupt it in a huge way, because it could have big effects on further down the supply chain and how quick they can deliver the goods, etc. So there needs to be investment, and I think there's a change in the mindset now following COVID, understanding the effects on the environment as well, but the losses that have been made during COVID from fashion companies just sat on dead stock essentially is going to shift that mindset into, it's no longer something they need to think about, it needs to be something that they need to take action on.
So the COVID has been, could be beneficial midterm into this change and accelerating, as we see in many other sectors, to more digitalization. So that could happen as well. So that's good. Another question I was interested was really about how much on the technology are you looking? I mean, we're talking about fashion tech. So how much technology, how much fashion design are you looking at when you look at a company? How it is important, and how do you review these two parts as well? How do you analyze these two parts?
Yes, so when looking at fashion tech businesses, essentially the technology has to come first. It needs to be able to move the world forward in some way. So if it's a B2C technology, does it create a new or better experience or products? And then on the B2B side, can the technology mean that we do things more efficiently or more sustainably? But in addition to that, you also need to understand the market in which you operate and understand the end consumer. But essentially, I think technology comes first, and understanding how that is you're going to be able to sell that into either direct to clients or on board on the B2B side. But you do need to understand who the end user is and how it's going to benefit them or how it's going to solve their pain points. So I think it's definitely looking at both angles, but a lot of technology also, whether it's fashion tech or just tech, overlaps into the fashion world anyway. So for example, VR and AR now has lots of use cases within the fashion industry. But you also, if you want to be applying that application to, say, virtual try-ons, you need to understand who the clients you're going to be selling to, what's that sales process going to look like, how are you going to onboard retailers? So it's understanding the components.
Yeah. I mean, what I see when I spoke to these different startups from DeFINE, for example, I mean, I see, of course, they have very good knowledge about the market, because, of course, they are coming more from this fashion world in a way. You know, they know the market, they know all that about consumer and habits, etc. But I was wondering if you think that they have good access to technology, and how do you, for example, when you talk about having a management team? So meaning the management team should be like a tech guy and a sales person, or how do you see the link? Because I see that maybe it's not so easy for fashion tech startups to access the right technology or the latest technology, or because most of the time, from my experience, they don't really come from the technology world, but more from the fashion world, and then they integrate the technology. What is your experience on that?
Yeah, definitely. So I think there's lots of technologies that are now available to buy almost off the shelf through API. So if you're doing an AI stylist recommendation tool, you don't necessarily need to be building that from scratch. You can build it by in existing APIs, which will give you a data set almost, and then you can build on top of that. So it doesn't necessarily have to be you own all of the IP within that business, but you need to also have a point of defensibility. So if
but
you
in that case, is that innovative enough? If they are getting things off the shelf. I mean, do you think it's innovative enough and good enough, I would say, as a technology? Because of course, today technology can be relatively cheap. The question is that the right technology, or maybe it's going to change in the next 2 years. So that's why I was interested to understand if you prefer something really new, or yes, you say okay, as long as the technology is there.
If the technology is there, but it's fine to buy in-house and build upon existing technology.
Okay. Yeah.
But at the same time, you also need to be building a moat around your product or service, in the fact that you are building you've got other data that other people can't access, or you've got access to a engaged client base that someone else hasn't, or will find it hard to tap into. So it's what's your USP, and so that someone else next week can't just spin up a similar company and do exactly what you're doing, or say if Google just decided to tap into it and just spin up another company which would completely crush you. So I think it's understanding the market, the technology, and how you build defensibility around that. And with regards to team, if you are going to be a pure kind of fashion tech business, then we would typically expect that you've got a tech person within the business, an understanding of how you can leverage that technology to create value. So yeah.
But for example, how important a patent could be for you? I mean, is it something really strong when they have a specific patent based on the technology, and of course that is protected, or it's not really a strong criteria for you?
It depends on the business model and what they're trying to achieve. So if it's a very tech intensive business, then it's helpful, but it's definitely not a requirement. So if you are a tech enabled business, but that's not necessarily where you're building value within the business, again, it might be that you are, say, a direct to consumer platform, which you need tech to be able to leverage the experience online or transactional, etc. But you were really kind of creating a community around your service or brand, then the value probably lies more within how you are able to maintain engagement with that customer base, how you're able to grow that customer base, not necessarily the tech that's within the business. So again, it depends on the business model and what you're trying to achieve. Is it breakthrough technology that you are going to go in and displace existing technologies? Then the tech's going to be really important in that instance. Or is it more around building an audience and selling to that audience or engaging that audience?
Yeah. Okay. I mean, in any case, it's first good lesson is really the technology is very important, and technology comes first, as you say. Okay, maybe it could depend, but it's a very, very important point, and I think that should be more stressed to companies pitching. Okay. The second thing was really to talk about B2B, B2C approach for you as a venture capital. What is, I mean, of course, it depends, I know, but how do you look at that? I mean, when you come to a B2C business, what do you think? When B2B, how do you react differently? I mean, and what do you think is easier to understand, or easier to analyze and invest in between B2B and B2C?
So we typically, and this is speaking quite in a general way, but typically when we're looking at B2B businesses, I'm very interested in what the sales strategy is there. So if you're onboarding, say, enterprise clients, how are you doing that to generate revenues? What is the sales process, and how are you building a repeatable, scalable sales funnel? So do you know who the buyer is for your end product, and do you have an understanding of how you get them to sign a contract with you, and what your pricing architecture looks like, and how you maintain those clients once they've been onboarded, and reduce churn and make sure you've got customer success in there? So it's all about, really, in B2B, it's having a product that meets the need or the pain point of that company who you're selling to, and being able to attract that client in a way that you can do again and again and again, and be able to evidence that there is a client out there, a number of clients that are willing to pay for your product or service. So it's really around, quite a large emphasis is on sales strategy and product within that, whereas the B2C side is more around marketing approach. So if you're B2C, in general, you're going to have to build an audience of people who want to buy that. So you've got to build a big audience if you're going to be profitable, unless you're selling for very high price points. But in general, you need to build an engaged audience. So how do you attract those customers? What is your marketing strategy? What channels work well? Which ones don't? Where can you plug in money into marketing and advertising? You will get a return on that marketing spend. And also, what's your USP? So if you're a direct to consumer, how are you attracting that audience? Why would they go with you over other players in the market? Are you delivering a better service? Are you delivering a better experience? Are you creating a better product? Are you creating a sense of community? So it's kind of two different ways. I think definitely on B2B, it's honing down on that, what the sales strategy is. And then on B2C, we kind of look at what's the marketing strategy around that.
Okay. I mean, of course, we're talking a lot about this traction, which is a key point for reaching out to investors, is what sort of traction do we have? And so because of course the COVID, for example, this year, I saw the COVID has created a lot of difficulties in creating traction, because either the people were not shopping, or they were just online, and people were just waiting, etc. So what is the level of traction? I mean, let's say in general, because of course, hopefully this COVID thing will be soon over. But in general, what sort of traction are you expecting on B2B and B2C when you say creating a marketing, community audience on B2C, for example? What are you talking about? I mean, are you saying, okay, there should be already, 500,000, 2 million, 10 million people, or what sort of idea do we have? And also on the B2B, what could be the traction? Is it just a few pilot projects, or is it, already clients paying full price, etc.? So that's to better understand the level, what you're expecting.
Yeah, definitely. So unfortunately, there's no hard and fast rule in terms of an exact number, which I know is not always helpful. But on the B2C side, so in terms of your audience, we would be looking at kind of different KPIs, which will evidence to us that you are gaining traction within a market. So one case might be that the market size doesn't have to be millions and millions, but it's a lucrative, more of a niche market which is highly engaged. Or it might be a larger audience, which is slightly less engaged, but you grow that out and it's maybe a lower price product or service. So we will look at kind of how quickly your audience is growing. What's the rate?
Yes.
What's the rate of customers who are churning? So they're not ever coming back to get your product or service again. How engaged they are with you as a company, tracking metrics around that, and understanding how ultimately what the engagement factors are around that. Are they interacting with you? Are they commenting on you? Are you getting kind of good word of mouth, and kind of the growth metrics around that audience? Whereas on the B2B side, we invest in kind of a growth stage. So we say that we like to see revenues of around £1 million, and we want to see evidence of product market fit. So we're, if you want to call it, a Series A investor. So what I say will be different to what a seed stage investors will require. But we typically at that stage would like a number of existing paying clients. So clients that are paying for your product or service. We need to have more than 1 or 2 clients, because we don't want to see, if those 2 clients were to end their contracts with you, then you've got too much client concentration. So we need to see diversity in the client base. And we would also be looking at your sales pipeline. So how quickly does it take you to convert those clients once you first engaged with them into paying customers? How many people are in your sales team, and how quickly do they convert on those leads? And then also looking into the forecast, how have you anticipated that that sales team will grow, and how efficient they will be again at converting leads? We'll also be looking at, have clients already churned? Have you already lost clients? What was the reason? And things like that. And also around kind of the contracts that you were signing with that. So great if you're signing 3-year deals and they pay you up front, because it gives you visibility over revenues and gives you a bit of safety net going forward. So there's a few different factors, but they're the kind of main focus on those.
Yes, sure. I mean, I think you touch a very important point. I think that is missing a lot when we talk to startup is really about these metrics. To have data to really better understand what's the situation in the market, what's the relationship with the clients or community, to understand that. And of course, to do that, you need to be able to do some sales and some interaction with clients to do that. But this part of data, I mean, we see that very strongly. That's what a lot is determined on that today. I mean, not just that, of course, but it's a big part. And again, startups have difficulties to develop that because they don't have so much clients, etc. So of course they don't have so much metrics. But also, I think there is a lack of information available on, for example, comparable businesses. What do they do? How do they work, etc. To have metrics. And I think in general that is something that is very difficult in the creative sector, because it's so fragmented that we have a lot of very small companies and small projects. And so we are lacking data because it's not really transparent. So we don't know what is there. And I really think that a key to access more financing, more funding, is to work on that, to really have access to more data and being able to compare to other businesses and show how it can develop. So I think that's very important. Okay, I see we are already 35 minutes, so it went very fast.
Oh, quickly.
Yes. So Anna, I think people will be interested to understand a little bit more how a venture capital company works as well, to better understand you do. So for example, I think everybody wants to know, where is your money coming from? Who's giving you this money, or not giving, but to invest? And what is your business model? How do you work at the end? How do you make money? Really, I think it's very important that startups understand your business model, so that you understand what you are looking for.
Yeah, definitely. So our fund is a mixture of money which is from the British Business Bank, which is a government outfit, as well as high net worth individual private investors who have entrusted us with their funds. And our ambitions for the fund is, whenever we look at companies from a potential investment perspective, is really, we want to be, say if we invest £1 million, we want to turn that £1 million in between 3 and 5 million is the return that we're looking at. So we're looking at 3 to 5 times return. And when we invest in a business, we're looking for exceptional management teams that have the ability to be category defining businesses. So we typically, when we invest as well, we will take a board seat. So either a member of the Edge team, or would bring in an expert advisor from our own personal network to help mentor that business through the investment process and post-investment as well. And then in terms of once you kind of engage with the VC, the typical process is myself or someone else from the Edge team will take an initial meeting, have you guys come and pitch to us. We'll ask lots of questions during that meeting, and then we take that to our internal investment team and basically present the business on behalf of the business founders. And we hope to get buy-in from the investment team at that point. Following that, we get the team to come and pitch to our investment team. And then we'll go back and start asking further questions, really digging into the financials of the business, the strategy of the business, the vision for the business, and understanding what this business needs to do in terms of KPIs to get to where they want to get to, and also understanding how we can help them as an investor. We like to be active investors. We like to open doors to our network, advise and mentor the businesses through that process as well. And then usually most VCs work on a similar kind of basis, is that we will get the business to come in and present to what's called an IC, which is an investment committee. So that's internal stakeholders as well as external board members who will come attend the meeting. We do a big paper which writes down everything from team management, strategy, financials, and then we'll get final approval on whether we would look to invest in that business. And then following that, investment monies are transferred. And then just in between that, there'll probably be a stage of due diligence. So due diligence is where we either internally do a lot of fact checking inside the business, or we might also enlist external consultants. So if it's a very technical business, we might get a tech due diligence provider to go in and look at the kind of architecture of the technology and drill into if it's defensible, all of those kind of bits. And we also gather, we've got a very big network at Edge of industry leaders around the creative economy. So we lean on those guys to give us advice on whether the commercial strategy makes sense from their experience and their perspective, and that all feeds into our due diligence as well. So that's the kind of typical process from us, guys.
Yeah, that's great. It's a long process. It could be quite complicated and take some time. Yeah. I think we can reasonably say it takes what, 6 months minimum or maximum?
It can be quicker than that. So it usually can be like 3 to 4 months typically end to end.
3 to 4 months. That's good.
Yeah. But one thing that I think is important to say as well is, even if you are still quite early stage and you've not really started the funding journey yet as such, it's good to engage investors quite early. So I keep tracks on lots of businesses that are too early for us to invest in at the moment, but I've got kind of we have this list which is called the back burner list, and it's kind of keeping track on early stage businesses that I think are interesting but just need to kind of get a little bit further in terms of traction or proof points. But I definitely have those businesses on my radar. So it's good to start those conversations early, build those relationships early as well.
Yes, definitely. So thank you for that, Anna, but you didn't tell us how you make 3 times or 5 times your million. how do you get it back? That will be interesting as well.
So typically, when we the view is that we invest in a business, and the business will either be acquired, or it may IPO, or if we invested to the business up to maybe Series C stage, we may get bought out by a new investor coming in if we've gone along that journey to the point. So we hope that the valuation of the business and the value that the business is building will grow over time. And we typically stay invested, usual investment horizon is 5 to 7 years.
Yeah, okay. I'm not going to go into the valuation issues, because otherwise we are going to have to stay until tomorrow. But I think it's a very important point to explain that, because obviously most of startups do not understand, or have difficulties to understand this part of saying that you acquire some shares, and in fact your goal is to sell this share as a different value, 3 times, 5 times, to someone else. Which is always, as you know, in the creative sector, is one of the kind of touchy issues. That for the people saying, okay, I'm developing this business, it's my baby, and all that, and then I find some investors, but I know that this investor will create value. That's great, but at some point will disappear and will give it to someone else, but we don't know who is going to be. So do you see people? I mean, how do people react to that in people when you invest, and I mean, is it something, of course, you have to clear before? That's what I'm trying to also explain to people, so that they understand the expectation and what could happen.
Yeah, so we want to invest in ambitious founders. So if they want to grow the business and then pass that down through family, down to their son or daughter, it probably wouldn't be a venture deal for us, because we need to be seeing that 3 to 5 times return. So completely fine if that's the founder's intentions, but that probably not aligned with our interests. And then in terms of exiting, so a business may get acquired and you may stay on as a founder within that business, so that you might not have to depart that business if you don't want to. But a lot of the founders that we work with do have ambitions to sell the company eventually, in most terms, that they have a vision in their mind and a strategy and a route where they could be turning over 1 million today, and they have the ambition and appetite to turn that into a £100 million business at a point where that gets sold to a larger business or eventually an IPO. So we definitely want to make sure that we're aligned with the founder as well. And it's always good for us as an investor to exit when the founder wants to exit, because then you're again aligned with the strategy of that business.
Yeah. No, it's very important, and this word ambition is really important, and that's why also when I talk to startup, that's what I always try to say. Okay, what do you want to do? Do you want to really develop an ambitious business, or more like lifestyle business, where it's also fine, as you say, it's fine, but it just doesn't fit for investment. And I think it's very important that people really realize that and understand what it means. And once they understand, I think it's easier for them, of course, to accept it or to go for that, basically. Okay, I see the time. I think I just asked you one last question on my side before we look at the question from the audience, but which is linked to that, is of course you are looking at selling further your share in the company. So how is the M&A activity in this sector? I mean, merger and acquisition, because obviously you are interested to invest only if you see that in this sector there will be some activities in merger and acquisition. Are there big companies looking at startups to buy, or do you see more, like, as you say, growth or development funds who will follow up on you? I mean, how do you see that? Because it's again, it's quite a young sector, and the question is, who could be big enough to buy these companies?
Yeah, good point. Yeah. So in terms of, in recent years, a lot of IPOs have been e-commerce retailers, so big brands that we're all familiar, like Farfetch, Boohoo, ASOS. And then in terms of M&A activity within the space, it typically tends to be strategic moves, which are either to access a new customer segment or create a better experience, or to add a technology which is beneficial to the business acquiring it, which they don't want to spend time and resource building themselves. So recent transactions, so there's been Signet Jewelers who acquired a company called Roxbox. Signet Jewelers are jewelers, and they acquired Roxbox because they were offering a subscription jewelry rental business. So Roxbox has obviously captured that market, created an audience and a service around that, and that was something that those guys wanted to have a piece of that pie and tap into, so it made sense from a strategic point of view. Another recent transaction is Walmart, I think only a couple of weeks ago, announced that it's acquiring the startup Zkit, which is a virtual try-on technology for shopping online. So I'm guessing that the motivation for Walmart is probably has got the money to develop that kind of technology themselves, but have found this technology and think it's more worth their time and cash to acquire it. And also Walmart are obviously wanting to enhance their online customer experience, so it makes sense from their strategy to acquire the business. So that's where we typically tend to see.
Yeah, so again, it's a lot about technology and community. I mean, it's accessing the technology so that you don't need to do it yourself, and accessing a certain community or market segment, basically, that you want to reach, but you don't reach now. Huh?
And in terms of investment in general, we've seen in the past 2 or 3 years, a lot of investment has gone into the resale marketplace business model. So Vinted, ThreadUp, Depop have all done pretty well in terms of gaining traction and investment. So that's a hot area, I would say, for investment in recent years.
Okay, great. So I'm just looking at the question. I think we touched on most of the points, but there was a question about the traction, the difference in traction between B2B and B2C. What could be the measurement for earlier stage startup? Yes, I mean, I fully agree with this question. It's really a good point. Is how do you start when you are in early stage? What could be some KPI for that?
I think
pilot. Sorry.
Yes, I think like you said earlier, the pilots. If you can get so specifically in B2B, I think it can be quite difficult to get, as an early stage business, to get buy-in from larger retailers. You've got a lot of red tape to get through before you can get buy-in. There's a long procurement process. So when you're kind of looking at B2B products or services, it might be a good idea to look at smaller brands who have more kind of an agile mindset and possibly more room to maneuver in terms of innovation to get a few kind of metrics behind it. So even though your end goal might be to sell your technology to an ASOS or a Farfetch, you can get those data points from a smaller brand or business in the initial earlier days, just to prove out that use case and create some kind of use case material around how that helped that business. So did it increase efficiency? Did it increase sell-through? Did it increase customer dwell time, or whatever the business and their KPIs are? But kind of focusing on trying easy, quick wins, low hanging fruit of how you can get those proof points in the initial stages.
Yeah. I mean, again, with the COVID situation, many people went for direct sales, basically by themselves to sell, of course. And of course, it's interesting, but the traction is very limited. And is it a good option, or is it something that you could understand if people start to do B2B, but knowing that this product at some point will be a consumer product, but starting by, of course, working with different partners, etc., to access markets and audience. Do you understand this strategy, or?
Yeah, definitely. So I've seen quite a few businesses that take the B2B approach in order to kind of get market traction in the initial stages and sell through partners. Not that Fitbit did this initially, but Fitbit obviously sell now through a lot of health insurance companies. Apple is the same, because their strategy is aligned. So, you know, health insurers want people to be more healthy, therefore giving them a Fitbit will encourage them to be more healthy, and Fitbit wants to target people who are conscious about their health. So when going down the B2B route, you need to make sure your objectives are aligned with that business, and they will be happy to push you as a product or service because it makes sense for them as a business.
Yes. There was a question about success stories, but I think we covered that. What are the typical key magic moments that usually convince investors to support startup? What do you think about that? What makes you really think, there is something there?
I think for us, really, because we still invest at quite an early stage, so it's all about the management team. It's about the management team's vision, how they articulate that vision. And we really want to be investing in teams which have a purpose, because purpose-driven businesses outperform their peers. So why are you doing this? What do you want to achieve? How are you going to change the world, even if it's in a tiny way? But really understanding the mission behind the business is what kind of gets us over the line. And you know, you might invest in a business and the product's not quite there, but you believe that the management team have something and can take either this version or the next version of the business forward.
Yeah. Okay, that's good. Another question is, well, I don't know if you can reveal that, but you say, okay, is there a fashion tech startup you have in mind at the moment, or you see as a strong potential for future growth? I mean, it's maybe your next investment, so you shouldn't talk about it, but.
Unfortunately, can't say who we're talking to at the moment, but all of the businesses that we're looking at in the fashion tech space, we definitely see are in areas where there is increasing interest from stakeholders. So hopefully there's a market for them guys definitely to sell into, and we see true growth in terms of kind of both micro and macro factors that are going to be affecting them going forward. So with any business that we look for, it's a given that we're going to see that we believe that there is a good growth trajectory there.
Yeah. How did you get in touch with these people, for example? I mean, is it through they sent the information to you, recommendation, it's pitching, it's, you know, how did they come to you?
One business we've been tracking for a while, and then another business came through my network from another, well, it was an accelerator company, and sent them on to him because they know our expertise within the creative economy, so know that we're quite a good kind of strategic fit for the business.
Okay, that's good. There is a question about, do you support adaptive fashion?
I'm not sure what's meant by adaptive fashion.
Yes, I'm not completely sure. If someone wants to, I mean, if a person wants to precise that, because I'm not sure what it is. So in any case, we are nearly at the end. Maybe just to finish, do you have a tip to give to a startup listening to us in terms of what should they do to access funding in general, I would say, and more precisely maybe for venture capital, but in general, how to get financing?
Yes, definitely. So I always suggest do your homework in terms of the VCs or the funders that you're approaching. Understand where they're investing, what they're interested in, what kind of areas they've invested in historically. The work that you've been doing, Thierry, tracking where investments have come from in the space is an incredibly useful tool, because I think previously it's been quite hard to access that data and understand who's investing where, especially around fashion, because there's not necessarily a load of, well, there's hardly any any funds that just invest in fashion. So there's a lot of generalist funds that will invest in fashion businesses, but it's not necessarily as clean cut as in terms of finding those businesses. So understanding who the investors are in the market, what are their requirements, what stage do they invest in. So if they're a Series C investor, there's probably not much point of you in contacting them if you're still seed stage. And then also, whenever I engage with a business, if someone contacts me on LinkedIn or emails me directly, the first question I'm going to ask is can they send over an investment deck which articulates the vision, the go-to-market strategy, who the team is, etc. So make sure that you've got a deck prepared so you can follow up quickly on those engagements, and make sure the deck really kind of conveys your message and on where that business is heading.
Yeah, thank you. So adaptive fashion is for disabled people.
Okay. So we haven't done any specific investments within that area, but it will definitely be an area that we would consider. We don't typically do hardware products. We do software products. Just a note on that. But yeah, we would definitely consider that space.
Okay. So Anna, thanks a lot. Thanks a million. It was really, really interesting. I hope it was interesting for the audience as well. And yes, make sure you develop your startup in the right way. Think about financing strategy. Who are the best support that you could find to finance your project, and venture capital could be one, but it's not the only one. There are only other types of funding that correspond to where you are at your stage and what you need, what's your ambition, to go back to that. And I think about what we discussed as well about the technology, the team has been very important, the scalability, data. Well, lots of homework, as Anna was saying about that. So thank you very much. Thanks, Anna. And thanks, everyone, and have a good evening or rest of the day. Thank you.